Welcome to the October 2025 edition of the GECF Monthly Gas Market Report. We would like to present a short overview of the main highlights of the report, which include the major developments in the gas market during the last month. As of October 2025, global GDP growth for 2025 has been revised upward by 0.1 percentage points to 3.2%, based on purchasing power parity, as forecasted by Oxford Economics. The global economy continued to display resilience, showing signs of solid economic activity persisting despite ongoing trade-related uncertainties, particularly between the US and China. The outlook for 2026 has also been revised upward by 0.1 percentage points to 3%, reflecting continued strength in underlying economic fundamentals. At a country level, US GDP growth forecasts for 2025 and 2026 have been revised up to 2.1% and 2.3%, respectively. These revisions were attributed to expectations for improved consumer spending and loosening financial market conditions. In the EU, GDP growth for 2025 and 2026 remains unchanged at 1.4% and 1%, respectively. China's GDP growth for 2025 also remained steady at 4.8% for 2025, while the 2026 outlook was raised to 4.1%. India's GDP growth forecast for 2025 and 2026 has been maintained at 6.9% and 6.3%, respectively. In the first 8 months of 2025, aggregated gas consumption in some of the major gas-consuming countries, which account for 75% of global gas demand, increased by 1.7% year-on-year to reach 2,346 BCM. Growth was recorded in the EU, UK, and North America, while Asia showed a decline. In September 2025, EU natural gas consumption rose by 2.1% year-on-year, reaching 19 BCM. The increase was mainly driven by higher demand in the power generation and residential sectors. Meanwhile, industrial gas consumption continued to decline, mirroring a slowdown in activity across major European economies. Total electricity generation in the EU increased by 3.6% year-on-year, reaching 198 terawatt-hours. In parallel, gas-fired power generation rose by 7% year-on-year, highlighting the continued reliance on natural gas to stabilize the power system. In August 2025, China's apparent gas demand, which includes production and gas imports, recorded a growth of 4.2% year-on-year to 37.8 BCM. In the first 8 months of 2025, China's gas demand rose only 0.9% year-on-year, mainly due to weaker industrial consumption from ceramics and glass producers amid economic slowdown, trade tensions, and a weak real estate sector. In September 2025, US natural gas consumption declined by 0.7% year-on-year to 67.4 BCM, driven by a decrease in demand in the power generation sector, typically the main driver of natural gas demand, which fell by 4.2% year-on-year. In August 2025, global gas production rose by an estimated 0.6% year-on-year to reach 353 BCM. All major gas-producing regions except for Eurasia and Europe recorded positive growth, led by North America, particularly the United States. European gas production fell by 4.3% year-on-year to 15 BCM, the 10th consecutive monthly decline. This was driven by reduced gas output in Norway, UK, and the Netherlands. However, the magnitude of European production decline was limited by the rise in Denmark's gas output, mainly from Terra Phase 2 gas field in the North Sea, along with a slight rise in Turkey's gas production. In August 2025, China's gas production maintained its growing trend to reach 21.2 BCM, representing a 6.1% year-on-year rise. For the period January to August 2025, cumulative production in China stood at 173.6 BCM, reflecting a 6% growth. Meanwhile, in September 2025, US total gas production continued its growth trend, to record a rise of 5.7% year-on-year, to stand at 91.2 BCM. This increase was supported by the increased Henry Hub prices, which improved market conditions, in addition to the rising domestic gas demand and growing LNG exports. In September 2025, the EU countries imported just 9.6 BCM of PNG. This decrease was due to Norway's planned annual shutdowns, maintenance in Algeria's upstream sector and compressor works in Tunisia, which is Algeria's transit country en route to Italy. After 3 quarters of 2025, cumulative EU PNG imports reached 106 BCM, a 9% decrease year-on-year. During this period, PNG imports entering via Poland increased by 20% year-on-year, while net flows via the interconnectors with the UK increased by 5%. In August 2025, China set a new record for monthly PNG imports at 7.5 BCM. This was an increase of 6% year-on-year, marking the 16th consecutive month of year-on-year increases in PNG imports. Total PNG imports after 8 months of 2025 increased by 9% to reach 55 BCM. In September 2025, global LNG imports rose by 3.7% year-on-year to reach a record 34.6 million tons for the month. This growth was predominantly driven by a surge in European LNG demand, which increased by 40% to 9.0 million tons due to reduced pipeline gas imports and higher gas storage injections ahead of winter. The narrow price spread between European and Asian spot LNG continued to favor US LNG deliveries into Europe. Conversely, Asia-Pacific's LNG imports declined by 5.3% to 22.7 million tons, reversing August's growth, largely due to weaker demand in China. On the supply side, global LNG exports grew by 4.2% year-on-year to 34.9 million tons, driven by stronger exports from Canada, Papua New Guinea, Qatar, and the United States. By the end of September 2025, the underground gas storage level in the EU increased to 86 BCM. This represented 82% of the region's capacity but is still 7 BCM less than the 5-year average. Around 51 BCM of gas has been restocked over the gas injection season thus far. In Asia, combined LNG stocks in Japan and South Korea were estimated at 13 BCM, which was 0.7 BCM greater than the 5-year average. In the US, the average daily storage level increased to 98 BCM, or 73% of capacity. Net gas injections in the US in 2025 thus far have reached 53 BCM. In September 2025, European gas and LNG spot prices remained stable, while Asian LNG prices recorded a slight decline. TTF spot prices averaged $11 per million British thermal units, down 6% year-on-year, while Northeast Asia spot LNG prices averaged $11.28 per million British thermal units, reflecting declines of 2% month-on-month and 14% year-on-year. In the US, Henry Hub prices strengthened, averaging $2.97 per million British thermal units, up 2% month-on-month. Conversely, Canada's AECO prices plunged into negative territory for 5 days during the month, falling by 55% month-on-month to an average of 24 cents per million British thermal units. Looking ahead, spot prices are expected to trend higher as seasonal demand increases with the onset of winter. Thank you for watching this short video presentation on the October 2025 edition of the GECF Monthly Gas Market Report. We invite you to download the full report from our website at www.gecf.org, or you can scan the QR code.